Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Tuesday, April the 15th, 2008. Just a friendly reminder, this is April the 15th. Our taxes are due today in the U.S., so those of you that have procrastinated to the last minute, just a friendly reminder to get everything postmarked by midnight. The headlines out of Switzerland this morning read U.S. banking sector and worries about U.S. economy put dollar under pressure. The dollar was little changed on Monday as more banking sector stress added to worries about the U.S. economy. Overshadowing the G7's warning on the threat sharp exchange rates moves pose to financial stability. A surprise first quarter loss at Wachovia Corporation, the fourth largest U.S. bank, suggested more credit market turmoil ahead, prompting traders to sell dollars, mostly against the euro and sterling. That helped wipe out dollar gains seen after the finance officials from the G7 developed countries on Friday expressed concerns about sharp currency fluctuations. The dollar had rallied briefly overnight on the view that G7 countries may start buying the dollar to slow its decline. But on Monday, investors were betting the G7 would not take action soon, especially with the Federal Reserve likely to cut interest rates further to support a U.S. economy that may already be in recession. Yesterday, the euro dollar was trading at 158.23 near its closing level on Friday. It fell as low as 156.71 after the G7 statement, but also traded up to 158.86, not far from last week's all-time high of 159.13. The pound dollar rose to 197.28 after trading as high as 198.94 intraday. The dollar yen was down to 101.13 after earlier falling to 100.31 following the news of Wachovia's losses. The Fed has cut the benchmark interest rates by 300 basis points to 2.25% since the credit turmoil began in late August, and is likely to reduce it again when it meets later this month. The European Central Bank, meanwhile, has held rates at 4% for more than a year, and comments from policymakers on Monday clearly indicated the bank's lack of interest in cutting rates, adding additional support to the euro. The ECB Governing Council member Yves Mersch said Monday there is no room for rate cuts this year. Any official attempt to weaken the euro and boost the dollar would run up against the respective monetary policies of the two central banks, limiting the impact of intervention. In addition to Wachovia, Merrill Lynch and Citigroup are due to report first quarter results later in the week, and analysts say both banks may announce billions of dollars in write-downs. Analysts are saying that the Forex market participants are likely to push the euro to a new record peak over 1,600, particularly ahead of the Fed's April 29th meeting. But I wouldn't bet the farm on it just yet. The dollar was marginally stronger in the Asian session. However, markets continued to discount the G7 communique and stronger U.S. retail sales. The Asian equity markets continue to trade in the green, and the European equity futures look to open above fair value. That is a good sign for growing risk appetite and carry trades. ECB's Mersch commented yesterday that the ECB doesn't have much room to cut rates this year. Mersch's statement was unexpectedly hawkish in comparison to Shay's, which increased emphasis on growth risk last week. This punctuates the fact that the ECB is still very much committed to price stability ahead of growth concerns. We expect the euro to stay supported in the near term and will be looking for a possible test of 159.10. In Europe, the markets focused on the German ZOO survey, which provided additional evidence that the financial market sentiment is improving. The numbers came in at a minus 40.7. The DAX has been performing relatively well since March as economic news encourages the euro. However, while its level is still elevated, it has not appreciated further. In the UK today, highlights were on the release of the CPI and the RPI figures. They both came in unchanged. Both figures were expected to creep up further, which would have complicated the BOE's dilemma further. Markets will be poised to trade depending on which way inflation is heading and how subsequent effects on interest rates will be affected. In the U.S., the Empire State Index and the NAHB will be the day's final focus. The reason traders pay attention to the Empire State Index is that the Feds release it weeks ahead of other major manufacturing reports, such as the ISM. The numbers released this morning were a positive 0.6, which was up from a minus 22.2 previously. The numbers for the NAHB will be released later this afternoon at 1 p.m. Eastern. With the positive numbers showing for the Empire State Index, it will be interesting to see what numbers appear for the NAHB later this afternoon. That concludes our news for today. We hope you are finding this helpful for your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. Also, you'll find a link to our Yahoo forum, which is also Succeed in Forex. We hope you'll visit us soon. Have a great trading day, and happy pipping to you until we meet again.